Ladies and gentlemen, welcome back to the channel. Here in this video, we will go over all of your breaking news you need to know today. I do also have a clip from CNBC I want to share with you. But first off, Iran is talking about closing the Strait of Hormuz, which would be a disaster for the global economy. This is a black swan event that is being introduced, a potential risk, and we will discuss that throughout this video. An Iranian lawmaker, Khosari, says closure of the Strait of Hormuz is seriously being reviewed by Iran. This would be the definition of a gray swan event or black swan event and could get really bad for markets. We'll discuss that in this video. But the good news is I don't think it's going to happen. But if it does happen, that's really bad. Let's face it. If that happens, that is the end of Iran. The government will no longer exist because the U.S. will be heavily involved. You're talking about gas prices exceeding $10 a gallon at the gas pump. No exaggeration. Could be more, could be higher than that. It would be an economic disaster on the global stage. Now, Israel says if Iran fires additional missiles, Tehran will be destroyed. An Iranian lawmaker, Khosari, says closure of the Strait of Hormuz is seriously being reviewed by Iran. This would be the end of Iran, okay? This would force America to get involved, like a more boots on the ground potential situation. This would be really bad because the Strait of Hormuz has 20 to 30% of daily oil supply that flows through it. It's just a little choke point by Iran. It's got, you know, Iraq, Kuwait, UAE, a lot of Saudi Arabia's oil flows through there. If that were to be choked off, yeah, you would see oil hit highs you've never seen before. That would risk the global economy. That would be a really bad situation. Okay? This is the only thing that matters with this Iran conflict. If Iran were to try to close this strait off, it would be the end of Iran. It would force America's heavy involvement. And it would not be good for markets because of the impact on the economy. Now, Iran said earlier today that the United States assets in the region will be struck over the coming days, and Iraq is requesting Iran not to target United States assets on Iraqi territory. U.S. Defense Secretary Hegseth says Iran shifting focus to the United States would be a bad idea. Hegseth says Trump prefers peace. Iran still has an option for it. And Iran has canceled Sunday nuclear talks with the United States. And here is that headline. It says Iran says that conflict will spread in coming days to U.S. bases in the region. Israel's Prime Minister Netanyahu says Israel will strike every site and every target of the Iranian regime. And it looks like Israel has struck an energy infrastructure site, South Gas Pars Field, which is reportedly burning. Now, take a listen to this clip on CNBC from Tom here that says there's a great bull market ahead, but protect yourself now.
Take a look at global and domestic risk right now for the markets. Samir Samana joins us. He's head of global equities and real assets at Wells Fargo Investment Management. And Tom McClellan is here on set with me, editor of the McClellan Market Report. Welcome to both of you. Tom, you've obviously been through a number of these skirmishes over the years. So what would you tell investors?
The recent days in the stock market have seen very quiet action, what we would call coiling, and its quietness should make you nervous because when the market gets quiet, that's usually a sign of a top, and so this is the triggering event that finally breaks things loose. It triggers the avalanche to finally let go of all that pressure that's been building up.
Yeah, you make a very similar analogy to what Ed Yardeni said on air, I think on Monday, when he said, my biggest concern is there's nothing left to worry about. You know, we had actually come all the way back from that April sell-off to say tariffs, that's kind of on the back burner. You know, inflation, the economy, like everything was kind of moving in the right direction. And now, obviously, we introduce a new element to the wall of worry.
And it's an unknown element because we don't know what this means because we haven't been through this all that often. And so if you get an earnings report, okay, we know how to interpret an earnings report, but we don't know how to interpret nuclear strikes against nuclear facilities because they've only happened about 3 or 4 other times. And so most people haven't lived through that. And this is just as we didn't know how to live through the tariff announcements on Liberation Day. Everybody freaked out because they didn't know what this was all about. They have a new thing that they don't know what it's all about. But this is all part of a larger cycle. We're supposed to have a down month in the month of June just for normal seasonality ahead of the July seasonal top. But there's longer cycles that say that this is supposed to be a bear market year. 26 is supposed to be a great bull market year, and I'm looking forward to a great bull market. Just not yet.
Maybe so sell in June, I guess, and wait till 26 or something like that. But because you have had such experience throughout these conflicts, but you also are always looking at kind of the technicals and large. So that's the setup that you foresee as a market that will continue to weaken?
Yes, and the troubling thing is that we've seen strong breadth numbers. The New York Stock Exchange Advanced Decline Line is possibly the best indicator of liquidity, and it's made new all-time highs, which normally that's a really bullish thing. Gobs of liquidity is a wonderful thing. But we've seen this scenario before. We saw it in 2015 after the first bottom, and you even had a Zweig breadth thrust in 2015 that signaled, hey, everything's happening great, and it did happen great, but only after a retest. We also saw this in August of 2022. Strong breadth on a counter trend rally fooled a lot of people into saying that there's a new uptrend starting. And one did, but only after a retest to the low. And so I'm expecting the similar scenario to play out this year. There's going to be a great bull market coming. It's just not coming here yet, and there's some protection you need to do in the meantime.
Now, again, I'm optimistic that Iran is not suicidal, that they understand what would happen to them if they tried to restrict the flow of oil through the Strait of Hormuz. It would be really bad for Iran. It would be really bad for the global economy because of energy prices. Energy affects everything. It would cause a recession at the bare minimum to get a prolonged shutdown of the Strait of Hormuz. Even like a couple days shutdown could be disastrous. And I think the United States probably already has many contingency plans in place if they were to try to shut down the Strait of Hormuz. It would get really bad for Iran quickly, okay, to say the very least. So I'm optimistic that they're not suicidal. And I don't know if markets are going to jump to looking at that headline and pricing that in. I have no idea because it's the weekend. I doubt it, though, because that is like right up there with, letting off a nuke in terms of how disastrous that could be on the world. Okay, so I'm optimistic that we'll kind of look past that comment for now, but I do think it is a potential risk that we need to evaluate if it gets talked about even more. That would be a potential black swan event. Although I think the markets are in a good place, that would be something that could really derail this market. The percent of stocks trading above their 50-day moving average sitting at 66.17%. So definitely getting a little bit of a drawback here, but still on the higher side of where we have been at. Okay. CNN's Fear and Greed Index ended off this week at 60, which is actually still pretty good. It's in the low side of greed. Market momentum in fear, stock price strength and greed, stock price breadth, extreme greed, put and call options, extreme greed, market volatility is neutral, safe haven demand at neutral, and junk bond demand also at neutral. For the first time as well last week, you had more bullish investors than bearish investors. This was obviously before the Iran situation, so I expect that's probably going to flip back coming in this upcoming week. You have bullish investors at 36.7%, Neutral investors at 29.7%, and bearish investors at 33.6%. So for the first time in a while, you actually had more bulls than bears. But yeah, I don't think that's going to last too long. And again, it really just highlights how bearish Wall Street is on this market. They have not been bullish for a while, ever since Liberation Day, and they haven't changed that. Which, again, in context to this new conflict we have in the Middle East and the fact that a lot of people are bearish, just look at what happened to markets on Friday. I mean, you were doing good for a large portion of the day in green territory, and then you slipped towards the end of the day as Iran started attacking Israel. But you actually seen a lot of strength from markets. Even though people are bearish, even though something negative happened, you still had strength. I think that's a sign that this market is actually pretty strong, despite what some people will say. So let me know your thoughts on all of this down below in the comment section. I hate to be the guy to bring you bad news over the weekend, but sometimes you have to. Again, I don't think Wall Street's going to take that one comment and run with it. But definitely, if there's more conversation that starts to be had about cutting off the Strait of Hormuz, that would be a much larger issue for stocks. So again, let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.